A lot of people think that getting out of debt and paying off a credit card or a vehicle before they purchase a home will help them out. That is not entirely true. In fact, for a lot of people, it can turn your mortgage transaction into a nightmare for a couple of different reasons. Paying off an account will have the ability to lower your credit score. The last thing you want to do when you're buying or refinancing a home is lower your credit score. Also, if you pay something off right before closing, you have to paper trail that. Now you have to show that you paid that off. You may have to submit that paperwork to the credit bureaus to get that zero balance reported. It can add time, delays, and headache to your transaction. So before you pay anything off, talk to your mortgage professional. Ask them about it. Ask them how to do it so that you don't cause yourself a problem. A lot of times we'll have people pay them off at closing. So say, for instance, they're buying a home, but they want to pay off a credit card as well. I don't have them pay off that credit card beforehand, because if they do, I got to show where that money came from. I've got to submit it to the credit bureaus. I've got to show a zero balance. I've got to do a million things that can cost time and money and ultimately delays. I'll have them bring in their down payment and the money to pay off that credit card at closing so that it's all above board and I don't have to get a ton of documentation and wait for credit bureaus to update. So anyway, just some tips. When you're buying or refinancing a house, don't pay off debt beforehand unless instructed to. There are some instances where you may have to do it, and you might have to go through that process of getting a rescore, getting your credit score up. But make sure you do it correctly. Make sure you don't cause yourself an additional headache. Thanks for watching.